A 2-year-old stablecoin payment service provider quietly grows to millions of users across more than 100 markets. Backed by Coinbase Ventures, Galaxy, and Vertex, it suddenly becomes a unicorn. Then, without hype, it plugs directly into Ripple payments and rolls out a new feature. Send crypto, receive Nigerian naira in minutes. XRP is supported on day one. Ripple's dollar is already part of the roadmap. It looks like a small headline, but under the surface, it reveals how modern payment companies are choosing their settlement rails. And Ripple is becoming one of them. The tension in this episode comes from a familiar disconnect. Most people read these announcements as marketing. Another corridor, another fintech integration. But if you look closely, something different is happening. A unicorn stablecoin payment service provider with serious venture backing has chosen Ripple's infrastructure for payouts into one of the most difficult remittance environments in the world. The average viewer sees a bullet point. The institutional viewer sees a pattern. Stablecoin-first payment companies are beginning to rely on Ripple's rails not for branding, but because they need settlement that is deterministic, compliant, and fast enough to survive emerging market FX conditions. That is the story we explore. Who RedotPay is, why they needed Ripple, how the new NGN flow works, and why Ripple's dollar and XRP now sit inside a live scaling corridor. Everything here is for educational and entertainment purposes only, not financial advice. Always do your own research before making any investment decisions. If clear, no hype crypto education helps you make sense of all this. Hit like and subscribe. It tells YouTube this series is worth showing to other newcomers, and it helps me keep building it for you. So let's start with the company that quietly triggered all of this. RedotPay is a global stablecoin payment platform that went from launch in 2023 to unicorn valuation in about 2 years. They offer multi-currency wallets, stablecoin cards, and payout tools that let freelancers, nomads, and cross-border workers convert digital assets into local currency. Their growth was fast enough to pull in a $47 million strategic round led by Coinbase Ventures, with Galaxy and Vertex joining. Those investors are not simply chasing hype. They are placing bets on which payment architecture will scale globally for stablecoin users. RedotPay focuses on markets where traditional banking rails are slow, fragmented, or expensive. Nigeria, Brazil, Mexico, Southeast Asia. These are not places where you can rely on optimistic settlement models or long, unpredictable clearing cycles. You need rails that work, even when the financial system around them is volatile, which is where Ripple enters the picture. At first glance, a stablecoin payment service provider, or PSP, seems like the last company that would need external rails. They already run card programs, wallets, and on-chain transfers. But payments and remittances require more than moving tokens between addresses. They require FX conversion. They require local banking connections. They require compliance workflows. And they require predictable settlement timing. This is where the gap opens. RedotPay can move stablecoins globally, but they cannot alone guarantee that naira hits a bank account in minutes, or that the FX conversion is clean, or that compliance standards are met across dozens of regulatory regimes. Ripple Payments is designed exactly for that gap. It is a regulated payout infrastructure that bridges digital asset settlement with real banking rails. For RedotPay, integrating Ripple replaces years of corridor-by-corridor build-out with a ready-made institutional payout engine. The PSP handles the user experience. Ripple handles the pipes. Now let's walk through what actually happens when someone uses this feature. A sender loads their RedotPay wallet with XRP or another supported asset like USDT, USDC, Bitcoin, Ether, Solana, Tron, and so on. They initiate a transfer to a recipient whose payout method is Nigerian naira. At that moment, RedotPay handles the conversion logic, shows the user the cost, and then passes the payout instruction to Ripple Payments. Ripple routes the transaction, uses its corridor connections to settle the value, and works with local payout partners to credit naira into the recipient's bank account. The entire process typically completes within minutes. The sender never sees Ripple, never sees FX complexity, and never sees the back-end mechanics. The system simply works. That invisibility is the point. Infrastructure succeeds when the hardest problems disappear behind an interface. There's a line in the official announcement that is easy to miss, but strategically important. Alongside XRP and the other supported assets, RedotPay says it will add support for Ripple's stable dollar in the future. Ripple is seeding corridors with its own digital dollar quietly, not through hype, but through infrastructure choices. The model is simple. Start with stablecoins users already hold. Prove the corridor. Then introduce Ripple's dollar as a more efficient regulated settlement rail once liquidity and compliance are ready. In this architecture, Ripple's dollar becomes the internal settlement currency for many flows, while XRP continues to act as a routing asset when it improves liquidity or pricing. They are not competing roles, they are complementary. Nigeria is one of the toughest remittance markets in the world. FX windows shift. Capital controls tighten. Dollar access fluctuates. Traditional remittance fees average around 6% globally, and settlement can take days. When stablecoin users in these markets try to convert into local currency, timing becomes everything. The longer the settlement window, the greater the FX risk. The larger the required treasury buffers. Instant settlement compresses those risks. It reduces float. It minimizes slippage. It allows PSPs to offer more transparent pricing. But to do that reliably, you need a corridor infrastructure that is deeper than a token transfer. You need payout partners, banking integrations, regulatory screening, and liquidity management. Ripple has spent a decade building those pipes. RedotPay simply plugged into them. Ripple did not assemble its stack at random. Custody from standard custody. Treasury orchestration from G-Treasury. Brokerage and liquidity from Ripple Prime. Wallet provisioning from Palisade. Payments from Rail. And underlying all of it, a regulated stable dollar and the deterministic settlement of the XRPL. Ripple Payments sits at the surface of that stack. It is the APIs and the compliance workflows. It is the payout engine that lets PSPs and banks trigger cross-border settlement without having to rebuild infrastructure. RedotPay is the perfect customer profile for this. Large user base, real volume, and emerging market corridors where settlement friction is high. By integrating Ripple Payments, they effectively outsource the hardest parts of remittances while keeping control of the consumer experience. Around the same time RedotPay went live, Ripple Payments was also adopted by Amina Bank, a regulated European crypto bank, marking the first production bank deployment of Ripple's end-to-end payment stack in Europe. That matters because it shows the same infrastructure appealing to two very different customers at the same moment. A fast-growing stablecoin PSP on one side, and a supervised bank operating across fiat and stablecoin rails on the other. Together, they frame Ripple Payments not as a niche crypto tool, but as a settlement layer that works across both fintech and banking environments. XRP's role here is subtle but important. It is one of the supported assets for funding transactions. More importantly, it can serve as a routing instrument when Ripple's system determines that XRP offers the most efficient path between the sender's asset and the payout currency. As Ripple's stable dollar gains adoption, XRP and that dollar will likely share the workload. The dollar acts as the institutional settlement leg. XRP acts as the liquidity bridge. In high-friction FX markets, efficiency wins. The signal is this. A Coinbase-backed fintech is comfortable integrating XRP directly into a regulated payout flow. That is not a narrative. That is a behavior. When you zoom out, the headline fades, and the infrastructure becomes clear. A globally scaling PSP has chosen Ripple's rails over building its own. A new corridor into Nigeria is now live. XRP gains another real settlement context. Ripple's dollar is positioned for future adoption. None of this is loud, none of it is speculative. But taken together, it shows how the real settlement layer of the digital asset economy is forming, piece by piece, integration by integration, corridor by corridor. And the companies making these choices are not doing it for hype. They are doing it because the pipes work. Thanks for watching, and I'll see you in the next deep dive. This channel is for educational and entertainment purposes only, and is not financial advice. Always do your own research and keep the discussion respectful. If you enjoyed the video, please consider liking, subscribing, leaving a comment, or sharing it with a friend.